Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for Friday, the 19th of July. We started gapping up, and basically the bull said, not happening today. Pretty much sold all throughout the day after gapping up initially on the open. I'm not unhappy about it. I didn't really want it to break and run. I would have rather a nice small body candle than a day of selling, but it is what it is as we continue to work through this earnings season. As you can kind of see here, it was pretty red. Utilities never followed through on that break or potential break of resistance. Yesterday, selling off some. We did see some decent movement in some of the aerospace and defense companies. Boeing was up nicely. Some big names with the earnings there next week. Oil bounced back a little bit here as well, but beyond that, it was pretty much the bears in control from beginning to the end of the day. Just kind of drifted all day long. On the earnings front, we're in it now. This week was nothing compared to what next week is going to be. Around 150 S&P 500 companies set to report here this upcoming week, so it'll be busy. And nice, Scott. I've never been able to even figure that out, so you're ahead of me, my friend. Welcome out. I hope you're doing well. Hope you had a great day. Better day than the market. Just kind of a drifty down day. On the earnings front, I mean, Amazon, Google, Facebook, Visa, Intel, Coke, Boeing, McDonald's, PayPal, Starbucks. I mean, just the names there's a lot of names and there's a lot of big names. So going into next week it's going to be pretty light. You know, as I was going through my routine, and welcome out, Lauren, and hi there, Emily. As I was, I'm not really too concerned about it, going into next week. Personally, Emily, I don't think we've done enough. We'll take a look at the S&P chart here, but there's not a lot of stocks that have good setups that I could trade even if I wanted to. This next week in particular is the toughest of the earnings schedule, in my opinion, because we don't have that many behind us. We're really busy next week and we're pretty busy the week after. And so I think I had like 35 stocks. I put a few more on there that I wanted to follow post earnings and not forget, but it was really light. Next week, I don't expect to do a whole lot of new swing trades. You never know what we'll run into, right? But next week will be tough with all of the earnings. Whether they're next week or the week after, it is really tight. As you said there, Emily, and welcome out, Jeanette. Great to have you as always. It was pretty red today. You are absolutely right on that side of things, Emily. We gapped up on the open. The futures traders got a little bit ahead of themselves, I guess. Pulled back. We did see some buyers come in, but it was short-lived, selling throughout the course of the day, ending pretty darn close. Now, or close to the bottom, I should say. If we look at the hourly chart, Emily, at this point in time, at least, we haven't really even seen a reversal, in my eyes, on the S&P 500. That would happen, of course, if it continues too much selling early next week. See if I can get a straight line there. That would be, again, we're talking an hourly chart here, so let's not get carried away. But at the same time, that would be a little bit of a reversal on this hourly time frame where we've put in a lower high and a lower low. So first line in the sand will be yesterday's low, from a support level perspective. But I do, personally, at least, I'm going to stress that is just on a swing perspective. I don't think that really anything beyond that. Would I like that to hold? Yes. Do I wish the candle didn't look like it did today? I don't mind that it's red. I hate that it's a gobbling up red, basically a top to bottom bearish candle. That's going to lead to a little bit of indecision, I think, going into early next week. So I think we're okay on both sides. Again, really, as long as we're holding 29.50, holding that breakout point, I don't think there's anything to see here overall. Personally, Emily, that is my line in the sand, so to speak, holding up there. Really, if we're talking about our swing low, though, we have to come way back here to our last pivot. So we could pull way back down into this price range before we're getting what I would consider at least clear sell signals on any longer term time frame. Now, short term, they could happen early next week. We're already still pretty darn bearish here today. But I think when we look at this in a broader context, this was just the day that was. I mean, am I going to guess that this is a top look in the weekly chart? This still looks an awful lot like a breakout to me. I don't have any reason to believe otherwise at this point in time. So that's how I'm going to be looking at the market going into next week. I'm not probably planning on doing a whole lot. One of my goals for the weekend is to go through the stocks that had their earnings this past week and see if there's any good credit setups for them. If I find anything interesting, I'll be sure to let you guys know. But broadly speaking, yeah, this is a pretty bearish candle, but breakout still intact. We're still above the 20 daily. We're still well above the 9 weekly. I don't think you can make a strong technical bearish case on the S&P right now. Whatever the reasons were, though, today, it was not meant to be today. And so there is a little bit of space if we do kind of give out that low that we put in yesterday, maybe to drift a little bit closer. But 2950, kind of that first number that I will be looking at, and reversal of trend really wouldn't be down until almost 2900 for me, which is also going to line up with that 50-day moving average. Ideally, we hold this 2950 range. I think that's the ideal from a bullish point of view. Personally, that would make me feel most comfortable from a bullish perspective. I did come off a little bit as I was kind of doing my work for the reports, drifted a little bit to the more cautious side on the S&P, but certainly nowhere near bearish with the way the chart is here today. Just the pretty pullback that we could have had for Monday morning, it's not there, right? So unfortunately, that is the case. Although we have some pretty bears. We had BGS from the option report, stock report. I can't remember which one, but they triggered in here today. So there's still some good bearish plays out there, and there's going to still be some good bullish ones, just not as many as we would like. Over in the Dow, we did hold up a little bit better, but it was really the same story as oftentimes is the case. Boeing had a pretty decent day here today. That always helps prop up the Dow Jones a little bit. The pullback's looking a little nicer in the Dow, but still it's just not going to be there for first thing next week, at least broadly speaking. Again, I think we're going to be looking at the breakout point as that first major level of support. If these breakout points give out, all of a sudden, I am starting to get a little bit on the worried side, but they've not happened yet. Certainly just a day of selling as far as I'm concerned, and maybe it'll turn into more. But right now, that's how I will be looking at it. Pretty ugly candle again over in the NASDAQ. And that's what's gross about today, right? It's these huge red candles on the S&P and the NASDAQ chomping into those what could have been really nice bullish pullback opportunities. At least that's what I don't like about today. The breakout point, we are kind of testing it at this point in time. And so this certainly is an area to be keeping an eye out for, in my opinion, at least. We're still above the rising 20. Hard to be too bearish when you're above a rising 20. When we go in and look at the 9 weekly, we're still well above the 9 weekly. It's hard to be too bearish when we're above those averages, in my opinion. But it's hard to be too bullish on Monday morning with the candle that was developed here today. From a signal perspective, maybe we kind of simmer down here and show some upward movement. Unless that is the case, I think you almost have to break resistance again on the NASDAQ to get that confirmation signal. At least that's where I will be looking as we work to next week. And then, of course, our old friends in the rut, little more indecision, a little more red than green here today, putting together a little bit of a floor over the last 3 trading days. If that floor gives out, we do see a little more selling in the market, maybe a little bit more room to the downside. Probably for me, though, not enough room to try to trade. Still going to keep boring old Russell in the same sideways 15 to 1600 approximately range that it has been in pretty much all year long. So that's where we find ourselves. It could have been really nice. It could have been really pretty going into Monday morning from a bullish pullback perspective. But for whatever reason, gap on the open, never catch momentum. Traders all of a sudden are kind of worried they're not going to get a 0.5 50 rate cut this month. I don't know. Maybe that's just the talking points. Most importantly, the price action does show that it was not going to be here today. We did hold out okay in the material sector, ultimately eking out a little bit of a win going into next week. Still fairly choppy, but still a little bit to the bullish side. Still going to be holding this support level as that primary level to be keeping an eye on. Not a bad idea to peek in on the weekly time frame. As you can kind of see here, it's really on a weekly perspective, kind of in a consolidation pattern. The break to the upside would be, that signal, right? What I like a lot about this sector is there is room. If we can get running, there is room. We've seen the metals really start to move. We've seen things like Dow, still, and one of the things that, maybe it's still a week away, but I personally think belongs on a watch list going into next week for this potential reversal pattern if we can ever break above, let's call it $53 to give it an approximate number. Still knocking on the door. We've got some like Ecolabs is coming out. They're really soon. I'm not sure if they're next week or the week after, but they're 11 days, probably going to have to pass on that break if it occurs. But Lynn has earnings way down the road, so break over there still will be in play. Our old friend CC from the stock or options report a couple of weeks ago, after breaking down, kind of gone into a little bit of a consolidation pattern. Got about 2 weeks till earnings. Early next week, I'm just going to steal that. If we can break down, there's maybe a bearish stock for my watch list going into next week. Overall, though, I think we continue to stay the course with the materials sector. As long as we're holding this 57 support zone, I think we are somewhere between neutral and bullish, just depending on how you feel. And welcome out, Amy. I saw you over there and was rambling aimlessly, but great to see you, my friend. We did see some upward movement off of the energy sector here today. I think you could make a case, and this is not really my style of trading, but I do think you could make a case that we're going to try to work back from support towards that resistance zone. We have been pretty sideways as of late. One nice thing that happened yesterday, we breached on the intraday, so we broke that support on the intraday, but we rallied to the close. And so what that's going to allow us to do, at least in my opinion, is to say if this goes below that low from yesterday, that is a bearish signal. And so from a bearish point of view, maybe retracements can develop, but broadly speaking, that will be the signal for me. From the bullish point of view, I could understand it. I'm not a huge fan of trying to trade within ranges like that personally, but I know that that is just me. Right now, I do think we have to kind of lean a little to the bullish side with this price action off of this support zone going into at least early next week. See how this one plays out. We're gonna have to deal with these shorter term averages, but they typically aren't as big of a deal in a sideways market if that's what we're having. Really, the bullish signal, though, at this point is basically now above the 200-day moving average for me. We've got plenty of earnings coming up in this area, so probably one of those areas overall going to shy away from for the most part here in the next week and a half or so of trading. Over in the financial sector, much like the market, started up, worked our way down. You did have American Express come in with a pretty decent, I felt, report, but we're caught up in the selling here today. Going to need some development in the upcoming days, but maybe something can set up for us over on American Express. A lot of the financials will be behind us. We still have plenty, but we have a lot of them behind us now, including Bank of America, who I think we can at least contemplate the merits of putting them into a breakout watch list. Nice little sideways action. We did have a little bit of an intraday break, but this shadow here was more intraday than midday type of a deal. I think it's worth keeping an eye on them in a bullish watch list going into early next week from a breakout perspective. Overall, it is more of the same. For the most part, earnings have been on, have beat, and then again, we could argue that the bar was low and that's why they won, but a win is a win is the philosophy I'm going under. And so a lot of these big banks have have beat the earnings expectation, such as it is. So certainly an area we can be keeping an eye on. We do have some insurance coming up here next week, so it's not done yet. But the big signal will be the break of this swing resistance for me. I really like the financials. I think we need to get some upward movement. But if we do, I like where we're at. I like that the way that the banks are starting to shape up. Of course, we'll have to see, what the insurance companies look like after we get through some earnings. But if we can take that out, again, on the ETF, I know it doesn't seem like very much. And so it's hard to get excited about, but really there's nothing until $29. And that just kind of illustrates that there's room on individual components within the sector, at least to me. That will be kind of the signal, a little bit upward more momentum. I could understand, early next week being interested in some stocks in the financial sector. And hey there, Jimbo, good to see you, my friend. Hope you recovered from yesterday's bike ride. Over in the industrials, ran right back up into that resistance zone, as you can kind of see here, but we're able to hold up, relatively speaking, better than the broad market. Gapped up and actually just kind of sideways. Smacked into resistance, did get pushed down off of it, much like the market. Second half of the day, a lot more selling than buying, but relatively holding up here. Now, that's not the most encouraging candlestick going into Monday morning. A little bit of a gravestone doji. I think for any follow through, we kind of want to see it take out at least today's high before we get too excited. Again, we've got Boeing, we've got Lockheed, we've got some big names in industrials reporting. You did have KSU, our old friends, and Kansas City Southern, report earnings here today. Decent little report. Still have this trading range. So again, this is probably more a watch list for me than something to expect next week. But I believe this absolutely, now that we're through earnings, overall have shown very well. Basically, since our last earnings where we kind of broke out, I think that this belongs on a bullish breakout watch list. At least it belongs on mine. Might need a little development, and might even be ideal if we have a little bit of development. So kind of a little bit of a mixed bag on the different railroad companies. Of course, we saw CSX really go the other way pretty terribly earlier in the week. Still looking pretty darn bearish, putting together a little bit of a floor. I think we can think if there's some downward movement, this might be a momentum type of a stock to be keeping an eye on for. So there you go. Love it, Jimbo. Love getting some cash flow, my friend. Never going to complain about that. On the actual ETF, I think we do keep an eye on at least today's high. There's just lots of little chunks, but we've got some big names coming with earnings. So hopefully when we're talking next week at this time, we have a little bit more clarity in industrials. Tech, much like the NASDAQ and much like the broad market, opened with the gap up, drifted down all throughout the course of the day. Some interesting names out there. We do have Oracle. We're going to need a little bit more development here, and that's okay. We need to get above those moving averages, in my opinion, anyway. But I'm definitely keeping an eye on these guys going into next week. Over in cost, we talked about them yesterday, or not Costco, well, Cisco. I've been doing that lately. I don't know why. So I still believe these guys are a very interesting breakout candidate. I believe the signal is above the actual high from last week as far as confirmation. Personally, there's still some interesting names out. We'll take a peek at a couple more before we are done here today. Broadly speaking, tech probably is going to mimic how you feel about the NASDAQ and the market as a whole at this point in time. Still above the breakout point. Heck, still even above the 9 EMA. Above everything, just not very strong candle going into early next week here. So let's see, Emily. I guess it probably would depend on you. I always take the school of thought that you got to be picky, Emily. And if it's not exactly what you want, wait. There's a good chance that you'll get it. And if you don't get it, who cares? It really isn't about what you don't trade, it's what you do trade. And so, if you're not comfortable with it, I'll always advocate for erring on the side of caution, getting exactly what you want, and not worrying about what could have been. That'll always be my stance. I know that everybody's going to have a different view of exactly what that means, but that's how I will always, answer that question, to be quite honest, or any questions like it. It's always going to be in the eye of the beholder. Are you comfortable with it? And if you're not, don't do it, right? There's going to be plenty of other opportunities, maybe Monday morning, to do it. And so we don't have to feel rushed. A lot of times we do feel rushed, which is why I like to do most of my thinking when the market's closed and just set things up and let it be, because I'm no different, maybe probably arguably worse than everybody else when it comes to making rash decisions. So hopefully that gives you something to think about, as opposed to an answer, because that really would really depend on you, to be quite honest with you. Over in the staples, more selling over there as well. Again, it's hard to make, say too many bad things about the staples at this point in time. They could certainly use a little bit of a pullback. They have been relatively strong compared to pretty much everything, still above most things. We did see Pepsi do something interesting here today, closing below the 50-day moving average and this old support zone. Still can talk about them from a breakout perspective, but at this point in time, if we see too much more downward movement, I would expect a little bit more pullback on Pepsi, which is kind of unfortunate. I was kind of hoping they were going to ultimately, hang up top and then break to the upside during earnings season, since they're behind their earnings. Doesn't look like that's the case. That's still certainly on the table. Need to get some confirmation. Don't necessarily know that this is a great bearish trade, but we could make a case that this is a double top breakdown with some confirmation. And so not a great look for Pepsi going into early next week. Beyond Pepsi, for the most part, it is more of the same. Yeah, that break of support's not great. The follow through is going to be really important, in my opinion, Scott. If that thing follows through, follows through on that break, I think you have to call that a clean bearish signal. What that might mean to everybody here might mean different things. To Jimbo, it might mean buy a put option. To me, it might be, whatever. If that continues, I would expect a little bit more selling, a break of the 50, a break of support, break of the old breakout point, downward movement. I do think we'd have to consider that a bearish signal, personally, at least. That's how I will be interpreting it. The movement, the confirmation is what matters, right? This is the candle. The movement confirmation, at least for me, is what is going to matter going into next week. So, more of the same for the most part. Walmart still kind of hanging around, much like the rest of the market, more selling than buying here today, but really just a little bit more of the same. It might need a breather of some sort, whether that's a consolidation period or a pullback. Broadly speaking, it has been pretty strong, and it really, unlike the market that's had some breathers along the way, right? We really haven't had a breather in the staples since we go back into the second part of June, when we had our last little pullback. It's pretty much been straight up ever since. So maybe it just needs a little bit of a breather. Over in utilities, no follow through off of yesterday's candle. We could argue that it was the actual high point. We could argue that none of it mattered, but whatever it was, we weren't able to follow through at all on yesterday's candle. Saw quite a bit of selling. Still, my overall opinion kind of stands bullish neutral until we cleared this out. That could have been today. If we would have, if we could have got a green candle out of today's price action above yesterday's high, I would have called it a bullish breakout. That is not the way it went. We know utilities can do this, right? We've watched it do this together, back through here. We watched it really back through here, right? Back last fall, desperately trying to break resistance. It took a long time and several tries before it did. That has been my concern really over the last several weeks at this resistance. I know utilities, I know they can do that, and I don't know that they're going to do it, but that was my concern with them. I still feel the same way as of right now. So still overall on the bullish side of things, we'll say that again and again, as long as we are holding this $59 breakout point, at least as we're currently developed. But right now it's still open to, ideas, but no really new trades until we break through that resistance, or we're back at that support zone or the 50-day moving average. If we pull back to the 50 and see some signals, maybe we can talk a little bit, but still battling at resistance over there. Pretty ugly candle. And of all the charts, this healthcare chart jumps out the most as, that really, is a pretty bearish, not just a bearish candle. Obviously, that's true, but that's true on a lot of things today, right? But when we look at where it is placement-wise, we're hanging at support. We've now below our 20. We're below our 9. A lot of pressure into the support zone. Now, there's a million little things to try to hold us up on healthcare. First one is not too far away, down at around $91. We're going to have the 50-day moving average. We're going to have all sorts of things. Don't think we want to get too crazy just yet, but some downward movement. There could be some room to go. I know we've talked a lot about Lilly here since it first broke its support level back, I guess it would have been way back in June. It doesn't seem like it was that long ago, working down. We've got a couple weeks until earnings. And so I thought since we've talked about this, I don't know if any of you guys are working with it, but I know we've talked a lot about it. We're kind of putting into a little bit of a break of that support level would certainly be another sell signal, right? If we look at the weekly time frame, and we've got a little bit of support kind of at that zone, right? So we kind of have to take out that floor. We don't have a lot of time. And so one thing we have to kind of reconcile on anything, not just Lilly, I'm just going to use them as the example, is we don't have much time until earnings. I'm not going to make a new trade, but I might have a trade on it, right, from days gone by. Do I have enough time to sit through a retracement? And that's going to be up to me to answer. We don't have to agree what that means, but we don't have too much time. By Wednesday of next week, if we start to see any upward signals, I'm not going to call that a bullish signal, but I might have to really consider closing out the trade, because if it does retrace, is there time? If I'm going to get out through earnings, I've made this mistake before. I know a lot of people have as well, where they sit through a retracement ahead of earnings and don't have time to let it kind of work the other way back for them. So do kind of keep that in mind as you're moving into next week, and really always, with not Lilly specifically, although if you have Lilly, I think they would fit the bill, but any trades you have to consider. It's really easy to say I won't get in because it's too close to earnings, but a lot of times we're in leading into earnings. We need to be making some decisions, I know it's an easy mistake to make, to sit through a retracement and then just have to give up and leave because the earnings are 2 days away. So something to keep in mind there. And we'll take a look at Tesla here, Scott, for sure. They're in an interesting price battle right now. I don't do anything with Tesla, but of course I kind of know what they're looking like. You had Merck also in healthcare. Got a couple days, just a couple of weeks until earnings here. We talked about them a little bit yesterday. Into that old support level, quite a bit of bearish movement here today. Not a particularly great look on Merck. On the other side of things, we got MDT was on the reports. I know it was on your reports too, Ilka. Pulling back here a little bit. Still got about a month until earnings. So some things are going to be looking okay, and I think that's how we approach healthcare. But right now, just like we've kind of talked about for the last week, I think we have to assume that this can be a little bit more of a rocky ride than other sectors, because right now it is. Right, you can tell just by today's candle and the way that we're moving. It's a little bit more volatile right now than the broad market as a whole. Over on the discretionary, we're going to get some pullbacks. We've got our Starbucks, we've got Mickey D's, so we've got Amazon, we've got some big names in the discretionary sector reporting next week. So again, a lot of them are going to get in the way of some potential trading opportunities. You saw, was it DG? I get confused between Dollar General. Dollar General developing a nice little pullback potentially going into next week. Again, is it Monday morning? No, not for me. We need to see this volume slow down. We need to see some sort of turnaround, but I think certainly fits the bill for me going into a bullish pullback. Same with Home Depot. Home Depot kind of drifting to the downside a little bit. Again, going to need some development early next week before we can, call it good. But certainly an interesting pullback if you're a Lowe's person instead of a Home Depot person. It's a little less pretty, in my opinion, but that is my opinion. It's very similar overall, and they do tend to trend together for the most part. So they're going to be, and we have some time on Lowe's and Home Depot going into next week. On the other dollar stock, we've really been battling a resistance. They were on my breakout list, pushed down heavily here today. It's easy to forget that, okay, they were on my breakout list, and now they're probably not going to break out, maybe at all, but probably not next week, if at all, right? It's easy to kind of forget about them, but don't forget about them. If, not just Dollar Tree, but, things in your watch list, this is still going to be a break, right? If it happens on Monday or 13 Mondays from now, at least in theory, 13 Mondays from now, probably new things would develop. I would agree if that's what you're thinking, but still going to be in line from a bullish breakout perspective, especially if we can kind of hold up this zone. So we're not over yet, but certainly we're a ways away. We have, who do we have? We'll look at them when we get to the discretionary or to the services. Overall, I think we're looking at this as a pullback, but we got to be careful. We've got lots of big names. Amazon is no joke of a name. McDonald's, Starbucks, these are big names. Bad earnings, and not saying that they're going to happen. I think with kind of the way it's been set right now, they're probably going to beat. But those earnings can impact that going into next week. I think Dollar General is still a month away, Jimbo, on the earnings front, if I'm not mistaken. Yeah, they're still a ways away. So, well, yeah, I mean, anything can do that, but I'm not going to take my chances, Jimbo, of being there when it does. We just have time, right? And yeah, absolutely. How it gets there really won't matter. A break is a break, right? And so anytime a stock breaks resistance, it's a bullish signal as far as I'm concerned. Doesn't mean it's going to be a bullish signal I take. Doesn't mean it should be a bullish signal that I should take. But anytime we break resistance, absolutely, that's always going to be a bullish signal because it's not easy to break resistance, right? So obviously that'd be a lot harder to trade, if that were the case. So that would be a different conversation altogether. Over in real estate, we've seen a little bit of a turnover here. Got to be a little bit more concerned. We came off of it a little bit last week in our scouting report meeting. I came off a little bit more here today. It's just starting to show a little bit of weakness. Now we haven't broke support, so I'm not, hitting the this is bearish button yet. But we've kind of flipped around on the averages. Fair enough. That happens when we go sideways, right? But falling through that 50-day moving average, we have a pretty good level of support here. If this 36.25, we've talked about that one before. If that one gives out, that would be a bearish signal in my opinion. Right now, I think it's probably prudent to come all the way off of slightly bullish into neutral, personally, on the REITs. I don't think we can be bearish with where it is overall, but I don't like that price action. Now, if we're able to, do something like this next week, and maybe we're going to put together some sort of a triangle or wedge type of pattern, then we can talk. Right now, I do think we're going to have to just look at the lows from back in June as that primary support level. Little bit of weakness. Not a lot of folks were looking to buy into that little pullback opportunity that developed. We saw a couple of stocks out there that kind of fit the bill, and just for whatever reason, at least thus far, buyers have not jumped in. And over in the communication services, it was pretty ugly on the ETF. Almost as ugly as the healthcare chart. I think big, huge, bullish or bearish engulfing candle. That's never a great sign, right? Going into next week, no matter where we are on the chart. Big names in earnings. Facebook, Google, both report next week. Who is it? Comcast? Comcast next week? Yeah, Comcast is next week. Verizon or AT&T next week. Of course, Netflix, the disaster. I was hoping they were going to dance a little bit on that support zone, but they weren't. I can't blame anybody for not buying them. That's a bearish signal. A little bit of follow through on Monday. I would have rather, kind of like we talked yesterday, have seen it baseline a little bit and then break, but it doesn't care what I would like. A break is a break. Negative sentiment behind it, a little more downward movement. I'll just put it this way: I wouldn't buy Netflix in any way, shape, or form right now. So I do think you could at least look at it a little bit from a bearish perspective. This is going to be an area, the ETF, we've got to be super careful going into next week, right? Probably, in my opinion, you're not trading XLC next week. This can just be dramatically impacted by Google and Facebook earnings. Very much like they can, right? Usually it looks a lot like them, gap up or gap down. So if we're trading the ETF, I do think we need to be very, very careful. I would personally shy away from trading it during earnings, especially. You guys know me, I don't really like this ETF that much anyway, but during earnings, I really would be scared to be trading it. Things are all of a sudden looking pretty rocky. We'll see how these earnings on these big names come out next week, but bad earnings or missed earnings on Facebook, that would be a failed breakdown. Of course, Google's trying to hold its own. After this recent break of resistance, we're still holding, but it's not too far away until where we could at least be pushing that down. We know the nightmare that Netflix is. EA continuing to push down. I hate UEA, the stock. I want you to know that. I hope somebody out there is enjoying the bearish move on EA. I'm not, and I never will be. But I always will say you should have let me do it, EA. But I know me and I know EA. So that's where we find ourselves. Quite a bit of selling here today. Taking a quick peek at Scott's Tesla here, needing to stay below 260. That is going to be a oh, you needed it below today. Oh, nice. Yeah, that was a sweater. That is an interesting. Now we got earnings next week, so whatever, right? This is a really interesting price point. This is where we had our big breakdown. If we can get some decent earnings on Tesla, I'm probably never going to trade Tesla personally. But if we've shown some pretty good signs of reversal, right? We've big breakdown, rallied up. We're testing that old support zone. Very arguably at least pushed through that here today or this week. We've recaptured the short-term moving averages on the weekly time frame. Obviously, we've recaptured them on the daily time frame as well. Earnings next week, that can completely make this chart irrelevant, right? Probably will, one way or the other. It'll be interesting one way or the other. Over in the, as we kind of move into commodities here, see if I can find my watch list back here. It was just kind of a day off, it seems. So I'm never going to be, well, never's a strong word. I don't anticipate being a Tesla trader anytime soon. So yeah, I can imagine, Scott, that was I think most of us credit traders have one or two of those experiences. They're no fun. So I'm glad it's over. I'm glad it worked out, but I'm also just glad it's over. That could be hazardous to our health. So a little bit of a spike on the VIX here today. No huge surprise as we see some selling. The dollar continues to just kind of be overall kind of all over the place, but staying in that same range over and over. We saw that big selling candle yesterday, big bounce back candle here today. Again, yeah, absolutely, Scott. That is not how we want our credit spreads to be. We don't want our credit spreads to be that exciting, right? so every now and then they might get that way, but we hope that's the exception rather than the rule. The dollar, it's sideways. Again, if we're playing intraday, great opportunities are presenting themselves. If we're not, we're sideways, at least as far as I'm concerned. Gold not carrying through off of yesterday's movement, but that is okay, right? A little bit of development, bounce off the 20, consolidation break. Obviously, gold, silver, both very, very bullish right now. Can't really make a claim against either one of them. Huge run up on silver, of course, and it happened faster than I think a lot of us thought it was going to after it broke out of that 1560 zone. So we might need a little bit of development, but both of these metals are showing tremendous strength. You guys certainly don't need me to tell you that by any stretch stretch of the imagination. Probably going to want to see how we respond here on actual silver, kind of at this old zone, this old second level, that 1616 zone that we looked at. This might be a place where if we can get some development, would make sense to buy. It's not there today. Of course, when we get going crazy, you guys know the drill. When we get going crazy, a lot of times if we're, trying to get in, we may have to go to shorter time frames before, for those entry points. So that's going to be a little bit tricky if you're not already in silver. Hopefully we get a little bit of development here early next week, but a ton of strength in the metals right now. On the other side of it, I mean, it's not easy being natural gas, so I guess just another rough day. You look at that weekly chart and oh my goodness, that is very bearish, right? Doji, huge confirmation candle. Again, at this point in time, it's still, as long as we're below that breakdown point, we know the drill, right? We put up and made it interesting for a little while. Hats off to you, natural gas. We certainly lost. Any bullish topics, they're not until we're above these highs, the very least. That's what has to happen in my mind. Right now, it's bearish. It continues to be bearish. And, well, no huge surprise. It's been bearish for quite a while, right? There's been some interesting moments, though. And lastly, over crude, a little bit of a day off today. Right now, I think we just kind of take a step back on crude, kind of like Mark's. I don't really dislike Mark's philosophy of looking for some signals for the boomerang right now. I don't think they're there just yet, but that is just me, of course. This is a tough place to trade directionally right now. If we break this 54, there is some space for us to maybe work with, but that's where it would have to start for me at least. And even then, I don't know that I would want to go short below 54. I just know that that might be a place that would get interesting for me because there is some room to work. Right now, we've got all sorts of things above, all sorts of things below. Over on the USO side of things, yeah, I mean, USO would make perfect sense. I know a lot of times Mark will work with USO, and he puts it nicely. It's like it's crude oil, and if we're actually boomerang doing the boomerang here, I mean, it's not disappearing, right? So we get it put to us and we will covered call it, and it makes perfect sense. I do agree with them, with Mark in that regard. Probably need to see some upward movement before I would be comfortable with that. But that is just me. That 54 zone, and it's kind of going to line up here with about that 1130 zone on the USO. Does make a little bit of sense as kind of where to look for it to start moving for whatever signals that you're looking for. If it does fall back, the one thing I would throw out there is there really is a lot of space between. You'd have to ask Mark on his exact rule there, Jimbo. I know he's been going over it in pretty good detail over in the commodity reports these past few weeks. So if you want to get deep into the mind of Mark Justice, which is a dangerous place to be, but fun nonetheless. So he'll go over it in better detail with you over there. The one thing I would keep in mind on crude is, however we feel about it, because of the way we've developed, there is quite a bit of nothing between around 54, and we should probably call it just north of 50, just with the way that we develop. So there's not a lot of support in this range to try to prop us up. So if I'm thinking boomerang and it breaks the 54, I'm assuming that it's not going to be that hard to drift down or work my way back down into the support zone at $50. So, well, I spent a lot of time with Mark over the years, Jimbo. I've known Mark for a long time. Mark and I have talked more trading than I care, and he probably cares to admit. It's a lot. We've spent. We've maybe went a little overboard a few times, and so that's why it's dangerous. You get talking trading with Mark for too long, and all of a sudden it's 3 days later, and you're still staring at natural gas. Stuff like that does happen. So, but no, he's got a good system down with his boomerangs. I definitely check out that commodity report over the last few weeks. He's been laying it out a little bit in more detail for you guys. So, ladies and gentlemen, that is going to do it for the recap for today. But as always, it's always fun. It's always an adventure, right, in the market, some days more so than others. The big takeaway, I mean, it's earnings season, so I don't really care, honestly, what happens that much, because there's not a whole lot. to trade next week without earnings getting in the way, whether their earnings are coming up or they've got big names in their sector reporting earnings. There are a few things that are interesting. BGS from the report this week did finally trigger. So if we're looking for something bearish, we saw BGS here break down. Still have a couple weeks until earnings. We have TRP, a little bit of a pullback over in the transportation, energy transportation services, couple weeks until earnings. So a few interesting names, but so many things. Albi was an interesting one here. I thought breaking above, more reversal type of pattern, but kind of that old textbook, created a higher low, created a higher high type of a pattern with a little bit of time before earnings. You've got PPG on a potential breakout, much like Lin and ECL. And certainly worth keeping an eye on. I'm going to continue to watch Lin. I'm certainly interested in a Lin breakout, Jimbo. If we get one. Lulu, same thing from last week's report, still consolidating up top at resistance. So not opposed. We have some time on the earnings side there. On the bearish side, we kind of have old SJM here over a month until earnings. Really showing some signs of reversal, kind of hanging by a thread at a support zone, as you can see right now, breaking of that support. Not a huge mover, but probably something in there. We looked at Bank of America, been looking at CTLT, the world's most boring retracement ever. I like Merck from a bearish retracement point of view, but we got to factor in that earnings, unfortunately. You've got BBY, threatening to break out. I thought, plenty of time on the earnings front. So a nice little breakout candidate. I thought both Dish and Discovery sitting in nice pullback opportunities. Kind of pulling back, need a little bit of upward movement right here on Disc A or Discovery, and here we are on Dish. Need a little bit of upward movement either way, but we have some room to work on the pullback side of things, and we have some time before earnings. So a couple of interesting things. Home Depot, I think for sure belongs there. KTOS, an old report, broke out, consolidated. Again, another break is another break, and we still got a little bit of time for earnings on that side of things. Micron, of course, had that nice break and close above resistance here today. So maybe it's something that we want to trade. Maybe it's more a watch list candidate, but certainly worth keeping an eye on, I believe. We looked at Oracle, going to need a little more development, at least I am going into next week. Little pullback on C, kind of got messed up here by the end of the trading day. Earlier in the day, this was a nice green candle. I thought we were going to get some confirmation, but still a little bit of a pullback over there. And on the other side of it, kind of have Zuo here breaking down a little bit, after kind of recapturing trend after that big gap down there, taking out this low. Could be a little bit of a signal. I want to watch and see how it responds to this trend line here going into next week. So my list is definitely smaller than usual, but I'm not surprised. I know my earnings, and I know that these next 2 weeks, that's just what it's going to be. And this week, upcoming week in particular, because we have so many that are reporting either next week or the week after that are going to invalidate things, then that's just the nature of the beast from a directional point of view. I can complain about it, and I do, as you know, but it is what it is. So I'm going to head off to this scouting report meeting, see what the other coaches have found. Hopefully they found some interesting things here as well. Again, there's going to be some directional trades next week, but I do expect it to be lighter than normal with the earnings kind of in the mid-swing, so to speak. Of course, guys, it's always my pleasure, and I appreciate everybody's time. It's always a lot of fun to talk trading with you. It makes my job easier as a trader, so I appreciate having to talk through my work instead of think through my work. It helps. I definitely appreciate you guys listening in as I go through the process. Let's see. We got the scouting reports. We'll get those to you here tomorrow, so you're ready to rock and roll. So you know the drill. We do pretty much, Jimbo, I'm open to immediately, and it'll depend on a case-by-case basis, but I am literally open to immediately, the moment after the open. One of my favorite things is stocks that gap into support or resistance and then immediately break through them. Have to make that decision from a day trading perspective. So for me, I'm literally fine the minute probably 2 minutes. So, but very, very, very soon after the announcement. And another time, you're just going to need the development. So much of it will come down to the development of the chart versus how long it needs to be there, if that makes any sense. So. Now we will, of course, get you those reports. Of course, if you are new around here, welcome. Great to have you with us. We certainly invite you to, hit that notification bell, hit that subscribe button, join us over at tackletrading.com. Send an email to Mark@team@tackletrading.com. He can get you set up with a free trial. Tell him I sent you. He'll probably give you a little extra something. I'd love to have you come check us out, see what things that we're doing over there. Be sure to follow us on Instagram. If Facebook's your thing, it's not my thing, so I pretend Facebook doesn't exist. But if you like Facebook, that's okay. Join us over there. Of course, on Twitter at Tackle Trading. You can find me at Frank Martin23, of course, on Twitter as well. So get out of here, guys. It's always a pleasure, always a lot of fun. Have a great weekend. Hopefully it's a little cooler where you're at than where I am. We are definitely in summertime here, and I am definitely ready for I'm going to be happy when it's August and I say, oh, the worst of the summer is behind me and the worst of earnings season is behind me. Let's get back to normal. But we have a couple of fun weeks before we get there. We'll enjoy them, right? We'll have a good time one way or the other. So get out of here, guys. Have a fantastic weekend. As always, thanks for your time. Thanks to those of you who catch the recording a little bit later. Always appreciate you guys watching it as well. So get out of here. Yeah, I imagine you're even hotter than me, Jimbo. I don't want to get into a competition because you'll win. So no, it's as hot as it's ever been right now where I'm at. So at least that's how it feels. But I've been in Vegas in July. I know that it can get hotter than it is where I'm at here. So yeah, it's a good idea, Mike. Yeah, it's that's a good way to do it. Yeah, I'm going to be doing a little bit of hunkering down. I'm going to scrounge around, see if I can find some decent credits for next week on things that have worked past their earnings. Be real wimpy here next week. So there you go. I mean, so yeah, most of us are tired of it. Some people love summer. I don't hate summer. I just don't like it being really hot. I like summer mornings and summer nights, the daytime hours, especially about 2 o'clock, right about the time the market closes when it really gets hot, of course, right? Now it's kind of hot all the rest of the day. It's pretty nice until then, but such is life. We'll live. So get out of here, guys. Have a great weekend. We'll get you those reports. And of course, I'll look forward to seeing you guys on Monday afternoon. So thanks again, everybody. You guys have a great weekend. Talk to you Monday.